What if I told you there's a semiconductor company that more than tripled its revenue in a single year, posted net income margins above 50%, and is just getting started? Credo Technology Group just reported its Q4 and full fiscal year 2026 results, and the numbers are jaw-dropping. Whether you're an investor, a tech enthusiast, or just someone trying to understand where AI infrastructure is headed, you'll want to stick around. Here are the top 10 takeaways from Credo's Q4 FY26 earnings call, counting down from number 10 to the biggest story of them all. Coming in at number 10, Credo's full fiscal year 2026 revenue topped $1.3 billion, representing a more than 200% increase year over year. And it wasn't just top-line growth. Non-GAAP net income surged more than 5 times over the prior year. Very few semiconductor companies have ever scaled this fast while maintaining product leadership and strong margins at the same time. This is a company that didn't just grow, it transformed. At number 9, the fourth quarter alone was remarkable. Credo reported Q4 revenue of $437 million, which came in above the high end of management's own guidance range. Here's the stat that really drives it home. That single quarter's revenue exceeded the company's entire fiscal year 2025 revenue. Q4 non-GAAP net margin hit 51.9%, and free cash flow reached a record $177.5 million. The business is not just growing, it's printing cash. Number 8 is about the optical product portfolio, which is shaping up to be Credo's next massive growth engine. Management guided for more than $600 million in optical revenue in fiscal year 2027, with 3 product lines: zero-flap optics, silicon photonics PICs, and optical DSPs, each contributing more than $100 million individually. That's a business going from near zero to over $500 million in optical revenue in roughly 1 year. The ramp is expected to accelerate sharply in the second half of fiscal 2027. Number 7 is the AEC business, which might get overshadowed by optical news, but remains an absolute powerhouse. Active electrical cables continue to win because they deliver up to 1,000 times greater reliability than traditional laser-based optical modules while consuming significantly less power. Credo is now deployed at 5 of the 6 major hyperscalers, and management made clear that even those existing customers still have significant room for deeper penetration. AECs are not slowing down, they're broadening. At number 6, Credo made a major strategic move with the acquisition of Dust Photonics, which closed just before the earnings call. Dust brings highly differentiated silicon photonics PIC technology, a strong design win pipeline, and a product roadmap extending from 800 gigabits all the way to 3.2 terabits per second and beyond. Importantly, Dust's architecture requires substantially fewer lasers than traditional designs, improving reliability, reducing power, and easing industry-wide supply chain pressure. CPO and NPO revenue from this technology is already expected in fiscal 2028. Number 5 is the supply chain story. With the entire industry scrambling for chip capacity, Credo went out and locked it in. Management confirmed secured capacity commitments across 3 nanometer, 5 nanometer, 7 nanometer, and 12 nanometer process nodes, matching each product line to the right technology. CEO Bill Brennan expressed strong confidence that Credo is positioned to execute an aggressive ramp in the second half of fiscal 2027, with the potential to double or triple volumes in the following year. This is not a company caught flat-footed. At number 4, NeoCloud customers are emerging as a serious new revenue source. These fast-moving cloud operators, building AI infrastructure for enterprises, model developers, and sovereign AI applications, are proving to be nearly ideal customers for Credo. They prioritize network reliability, deploy quickly, and need exactly what Credo sells. Management suggested NeoClouds could realistically reach 20% of total revenue over the coming years, representing a meaningful diversification away from the company's core hyperscaler base. Number 3 is the headline guidance figure. Credo is projecting more than 80% year-over-year revenue growth for fiscal year 2027. The first half will see mid-single-digit sequential gains, largely driven by continued AEC strength. But the real inflection point comes in the second half, when the optical portfolio, zero-flap optics, silicon photonics PICs, and optical DSPs, is expected to hit its stride simultaneously. Management also guided for non-GAAP net margins staying near 50% even as the company scales. Coming in at number 2, Credo's next product generation is already lined up. The OmniConnect Weaver chip addresses memory bandwidth and density challenges for inference workloads, and early customer positron is already shipping a product with 2 terabytes of LPDDR memory, more than 10 times any other inference engine announced to date. Weaver could generate between $2,000 and $3,000 in revenue per GPU. The active LED cable, or ALC, extends AEC-class reliability to distances up to 30 meters. Both products are targeting production ramps in fiscal 2028, setting up Credo's next leg of growth. And the number one takeaway, the thread that ties everything together, is Credo's foundational obsession with network reliability. As AI clusters scale from tens of thousands to hundreds of thousands of GPUs, the weakest link is no longer compute. It's the fabric connecting everything together. A single flapping link can delay cluster bring-up and waste millions of dollars in GPU time. Credo has built its entire strategy, its hardware, firmware, telemetry software, and system-level integration, around solving that exact problem. Network reliability isn't just a feature for Credo. It's their North Star, their competitive moat, and the reason hyperscalers and neo-clouds keep coming back. And if AI infrastructure continues scaling the way everyone expects, Credo looks like it's just getting warmed up. That's a wrap on the top 10 takeaways from Credo Technology's Q4 FY26 earnings call. If you found this breakdown useful, hit like and subscribe so you don't miss the next one.